It's no shock the coronavirus has forced our economy into disarray. Some financial side effects of this pandemic are quite surprising. Financial professional Ernie Burns from Burns Estate Planning and Wealth Advisors is here to share some of these COVID money quirks. Ernie, good morning. We appreciate you joining us.
Good morning, Kelsey. Thanks for having me.
So you and I talked in the break a little bit about some of the impacts that this ongoing pandemic has had as far as finances are concerned. Can you kind of explain what some of those are?
Well, the University of Chicago came out and basically said the positive thing is people are saving more, which is nice lately. In addition to the market's been volatile, so people have to watch how they invest, which I'm going to get to a little bit more. But the big thing about it is it's here. The good thing is that vaccines will be coming out possibly after November, but definitely beginning of the next year.
And so that's one of the good things, that people are saving, so we are seeing some positives. Are there any negatives we're seeing? Obviously we know, but can you explain some of the negatives that we're seeing as far as the pandemic's had on finances overall?
Overall, it's stress in the family, and people are taking jobs right now possibly that they were not meant to basically employ for, but that negativity has resulted in politics have gotten involved in the markets lately. And that being the case, the negative news out there has not put a lot of inspiration in the economy or in our society right now.
And you mentioned yesterday's news from the White House. We've already seen impacts on the market because of that announcement yesterday. Can you talk about that for us?
Yes, a lot. Basically this, we have to be more focused in the market, but President Trump came out yesterday and said he's not going to pass a stimulus package before the election. That spurred the market for a 600-point turnaround from a 300-plus point positive to over 300 points down. Now the markets are rebounding a little bit this morning, up 200 in the futures, but expect volatility in this market until after the election. And that being the case, we don't know when we're going to actually find out who wins the presidency until maybe a day or two, a couple days after. That you have to be prepared in this market how you're investing. If you're over 50, you need to be more targeted, more precise how you're investing. If you're under 50, no big deal. You keep contributing to your 401ks, you're buying shares cheaper. And this volatility, you can actually make more money when you're younger because you're adding to that dollar cost averaging philosophy in your 401k.
So the takeaway is for everyone, no matter your age, to just be prepared for anything at this point.
Right now, be cautious, be more precise how you invest, and keep trying to plow a little bit of money to the side.
Ernie Burns, we appreciate your time.
Thank you very much.